We're live back at TradeTech Equities Europe for the first time since the pandemic and have been discussing with attendees the three key themes facing trading desks: the future of trading technology, the use of artificial intelligence and machine learning in trading, the role of automation and data in trading desks.
TradeTech Europe is such a fantastic event, and I know the equity community are delighted to be back. It's been 2 years in the waiting. The event is the perfect opportunity to bring the buy-side community, the sell-side community together to have those important conversations that they just haven't had peer-to-peer for the last 2 years. So I, for one, am delighted to be here and to be able to facilitate it, and you can see the smiles on people's faces. They are absolutely delighted to be back in action.
We've seen in the industry a compression in fees, increased regulatory scrutiny, and also scrutiny from the buy side over how their brokers are able to interact with flow and interact with the market. Profitability is often down on the sell side desks, and the pressure that is being placed on those desks to get better results using the same technology and adapt to new execution methods has increased tenfold. One of the things that we're looking at over the course of this event is talking to different market participants to really understand their views on how the trading technology landscape has evolved and to see how it's impacting them in many different ways. And I'm excited to find out how.
Thanks for that, Meaden. Now, let's see what the other attendees had to say.
I think the future involves more investment, more people, more resources, and a lot more time and effort to fully understand the trade life cycle.
So the world for us is not about just automation. The world for us is about the synthesis of technology and people.
Over the last 2-3 years, I would say, is a real evolution of the trader into more of a multi-tooled person, multi-skilled, multi-tool person. So a bit like they have to become a bit more like a Swiss Army knife of skills. So whereas previously it was fundamentally about street smarts, or you're a quant trader, I think now you've got traders that they need street smarts, they need quant skills, they need the ability to code, they need the ability to analyze, sort of do data analysis. Not necessarily at any particular high level that that other functions in the business are going to be doing anyway, but in order to communicate effectively with those other teams very well.
So what we're seeing is really a consistent push towards a much higher level of automation, increasingly moving away, markets becoming lower touch, and for us, I guess the key innovations that we're starting out across more asset classes, more things that we trade, increasingly are becoming straight through and requiring less interaction with our trading desk.
So the development is definitely about improving smart order routing and about being able to react to dynamic liquidity as it comes in. It's basically walking a fine balance between finding liquidity without telling people that you're going for liquidity. So in a quiet way, how do I achieve that goal?
The key thing is to know where you're starting out. And so if you're a company that doesn't have very much automation in their trading, the key place to start is just focus on automation. So what are the things that you're doing that you could have automated away?
We're always talking about this idea of data-driven automation, so analyzing both the TCA outcomes, the real-time market conditions, and helping traders make those decisions as quickly as possible to the benefit of their clients.
Therefore, machine learning is inevitable for me, especially for trading. AI and machine learning actually helps to process a lot of information for a specific outcome and give you the highlights of what's going on the market or a specific security, but managing bigger amounts of information in a short period of time.
Absolutely. AI is going to speed up decision making. It won't actually make decisions for portfolio managers, for brokers, for dealers, but it will enable them to have decision-ready technology and decision-ready information at their fingertips.
What's more interesting for someone such as myself is how some of those techniques can be adapted or learnt from and then applied to other asset classes such as fixed income, government or corporate bonds or interest rate derivatives, as well as FX and other potential derivative markets.
So machine learning and AI is a crucial part of what we do. it's important to how we're actually coming up with our positions we want to hold and our overall portfolio construction process. But it's also key in execution. How do you make those decisions about how to execute a particular trade? Do you go straight to the market? What algos do you use? These are problems which many of the techniques in machine learning and AI are really suited to be able to help solve for you.
All of those elements, I think, machine learning and AI will be a lot more adept at giving us colour and visibility into the best way for us to assess the market.
Well, algorithmic trading is a real key part of the search for liquidity, and searching for strategic liquidity will remain a top priority for the sell side on behalf of their customers. Well, electronification of the markets and algo trading continue to remain key areas of the market, and we've talked about the trade at last phases, we've talked about notifications through interoperability on the desktop, etc. But also, one of the key innovations that we're starting to see more about is people wanting a broader opportunity to trade global markets.
Another trend that we've certainly witnessed is more of a, it's not that we discount the algos available from external providers, but we have seen a renewed reinvestment on the internal algo development side as well.
There's a fear from trading desks. If I get a phone call now from my buy side and they say to me, okay, what's the algo going to do during the auction? And I can't reply to them and say, well, this is how it's going to behave, that they're going to be concerned about whether I really know what my trading platform is doing. So the evolution that we've seen and the use of AI ML and opening up the algo landscape is to try and provide feedback to traders in these conditions. These are the algos that you should think of using. And here is the way that they're going to behave so they can articulate it and have confidence.
So I think one of the key things that we've all had to focus on post-pandemic or through this period is that interoperability. It's in an environment where potentially we have access to less compute, less screens, less services than what we've traditionally been used to having in the office. Interoperability between the various different applications and processes that we have to use on a day-to-day basis has become increasingly and more important.
Working from home, a shorter working week. The electronic nature of the markets has meant that the market traded huge volumes almost without any interruption at all.
So I think the area of the trade life cycle that needs the most attention is matching, clearing and settlement. It's not actually the trading part, it's the post-trade matching, clearing and settlement part. And I think you'll see a lot of firms start to invest really heavily in AI and automation in that part of the equity life cycle.
You're going to see more and more of the general electronic connectivity, so like that integration component, I suppose, which was historically, only available for super vanilla exchange traded stuff. I think more and more you're going to see more OTC products being kind of integrated on an electronic level.
I think longer term, the post-trade business will see some automation happening there. I think people will build rules to be able to react and pause algorithms in a more automatic way. At the moment, people get alerted, they put a pause on an algorithm. I think people will start putting boundaries and rules around at what stage outside of one standard deviation or a certain deviation from the mean, they might say automatically pause and then alert that to me.
We measure everything. Every trade we execute, what the market conditions look like, every quote we get from a broker, whether or not we hit it, is really important to have that data written down, because if you don't have the data, you can't act on the data.
Data is essential. You cannot trade if you do not know what the price of the security is and what is the risk of that security at the same time. So data needs to be, first of all, timely. So live data for trading is necessary. Secondly, you need to also have all of the parameters of the execution, be it bid and ask, the volumes, all the information that you need in order to trade. Thirdly, as well, you need to be sure that the data that you are seeing is correct.
And actually that's key for the EMS providers, is how can I absorb these alternative pieces of data or even create new data from machine learning agents to decide how can I find patterns inside the data that's already available to me.
So the beauty of the event that it brings the trading and technology together. Now that we're all back and people have got to see each other for the first time in a while, the conversations can now progress more on the technology, innovations, the future of trading. So I'm really excited to see what we can bring for May next year.